This is my complete investor's guide to investing in the stock market for 2025. I'll walk you through my system, which earns me an average return of 30% per year over the last decade. To really understand my system, we need to look at the S&P 500 index first. Since the 2020 low, it has climbed around 75%. During that same period, stocks like Fiserv, GoDaddy, FTAI Aviation, and Vistra have all climbed over 100%. In 2024 alone, while the S&P has risen about 27.5%, Vistra, the top performing stock in the S&P 500, has soared 280%. Nvidia has climbed over 180%, and Palantir, now in the Nasdaq, has surged 325%. In my early days of investing, finding good stocks was a real challenge. Like most people, I would scour the internet for trending stocks or subscribe to various newsletters and websites hunting for hot picks. I wanted to escape this chaos and develop a more systematic, chart-based approach. I experimented with techniques like Elliott wave theory, Ichimoku clouds, and Fibonacci, but found them to be too subjective. These methods negatively impacted my stock picking and portfolio performance. So I stripped away from all the clutter and created my own systematic, rules-based approach, one that was simple to execute and repeatable throughout my investing career. Through this journey, I discovered that all good stocks go through 4 distinct phases. This realization led me to create the 4-phase sequence method, or the 4PS method for short. Every single stock and asset we invest in goes through 4 crucial phases, with phase 4 being where we enter and catch the current uptrend as it unfolds. This method breaks down like this. First, we identify stocks with proven performance history. Second, we wait for a prolonged consolidation or base to form. Third, we confirm the breakout from that base. And finally, we enter the stock at the start of the next major uptrend, which is phase 4. I apply this to the monthly time frame because we can get an immense amount of information from that time frame alone. We can see past performance, current movement patterns, whether it be up, down, or sideways, and determine future profit potential. All this from just the monthly time frame alone. The 4PS method has already proven its worth. Look at GoDaddy, Fiserv, FTAI Aviation, and Vistra all began their phase 4 last year. When trend followers like us identified an edge, we took a position and rode the trend up. The results spoke for themselves. Now, a key point for stocks moving from phase 3 to phase 4 is that they must be setting new all-time highs when they embark on their latest phase 4 uptrend. This aligns with our trend following logic, which is buy high, sell higher. Stocks setting record highs typically move the quickest over 12 to 18 months because there's very little price resistance above to force the stock price down. Compare this to stocks trading at a discount. They have many resistance levels above that could keep the price suppressed. These stocks have to work much harder to return a profit. And I'm not interested in stocks that have to work hard. I prefer profitable stocks moving through the path of least resistance. Another crucial point, when a stock is pushing up and setting record highs, we can assume the company is healthy. This saves countless hours studying fundamentals like PE ratios. The stock's upward momentum and new all-time highs tell you everything you need to know. Now, let's talk about finding these gems among the approximately 20,000 available stocks. That's an overwhelming number, which is why many investors resort to online shortcuts or never venture beyond big tech. But remember, there are 11 sectors in the stock market. Tech is just one. Our job as investors is to find the best performing stocks from the strongest sectors using a straightforward, repeatable, systematic approach. A little pro tip here for you. Don't let anyone tell you stock picking is impossible or only for city professionals. That's absolute nonsense. Technology has leveled the playing field. Managing a portfolio from home and outperforming professionals is now within reach for anyone willing to learn and apply the right methods. The saying goes that good investing is simple but not easy. The best techniques are straightforward to learn and execute. The challenge lies in maintaining consistency year after year through all market conditions. That takes experience and resilience, but well worth the rewards. To efficiently scan through 20,000 stocks and find those transitioning from phase 3 to phase 4 in 2025, you need a good scanner. Program it to identify stocks from all sectors that are setting record highs, have volume over 1 million, and at least 10 years of history. This typically narrows the field to 100 to 200 stocks daily, much more manageable than 20,000 stocks. I then take this initial list of stocks generated by the scanner and manually go through them using chart and bespoke trading tools we have developed. My chart analysis setup uses 3 screens: monthly time frame in the top left, weekly in the top right, and the daily chart across the bottom. I look for multi-time frame alignment, all 3 time frames moving in the same direction. On the weekly and the daily chart, I use the 50-day and 200-day simple moving averages. When a stock is above last year's high on the monthly chart and above both moving averages on the weekly and the daily chart, you have bullish alignment. Let's use Amazon as an example. It recently passed our screening and we shared it with our investing community as a portfolio candidate. All 3 timeframes show bullish alignment. It's moving from phase 3 to phase 4 and has consistently trended upwards over the last 20 years. At around $230 per share, it has good upside potential to reach $500 in 2025. Compare this to Wyndham Hotels and Resorts, which shows current price alignment and new highs, but lacks an appealing performance history. This type of stock gets dismissed, as do all stocks with similar patterns. This systematic approach helps you process 100 to 200 stocks in under an hour, cherry-picking only the cream of the crop. With practice, identifying good stocks becomes seamless, typically leaving you with 5 to 10 prime candidates for your portfolio. The final step is to implement a trend-following strategy. This requires clear rules on entry points, stop losses, risk allocation, and exit strategies. Here's a breakdown of each. First, the entry point. Look for confirmation of the breakout, wait for a pullback to retest the breakout point, and then enter on the next breakout. This is when a stock confirms phase 3 to phase 4. Patience needed here for the right setup and to avoid fake breakouts when a stock moves from phase 3 back into phase 2. Next is the stop loss. Calculate it based on volatility, or ATR. Use at least a 4x multiplier to set a stop loss wide enough to avoid being stopped out by normal price fluctuations. A pro tip: the wider the better for me, so I regularly use a multiplier greater than 4. Next up is risk allocation. Risk no more than 2% per position and limit total exposure to 20% of your portfolio. Take small positions and spread your risk across as many good stocks you can find. Do not go too large on any one stock, no matter your conviction. Every stock has the potential to fail from the get-go. Now, next up is compounding. Add to winners, not losers. Once a stock moves, say 1-to-1 risk to reward in your favor, buy more of a winning stock. Avoid the temptation to take profit, as this won't grow your account. Holding and compounding will, and exponentially. Then is the all-important exit management. Use a trailing stop loss to stay in trends for as long as possible while removing emotions. Trailing stops keep you in winners for 12 to 18 months, allowing you to ride the full trend up. My trailing stop loss is typically the same as my initial stop loss. I then tighten at key levels or when the market is showing signs of a reversal. Take this process to the next level by watching this video, where I show you how to grow your portfolio by consistently extracting profit from the top stocks you've filtered through the system I have just shared with you.